Hey, this is Neil Bawa, the mad scientist of multifamily, and you're listening to the Mailbox Money Show with Bronson Hill.
All right, so welcome to the Mailbox Money Show. I'm super excited to have my friend David Morgan here, who writes the Morgan Report, who has been an industry leader in the precious metal space for many years. Some of you may wonder, why you talk so much about precious metals? I mean, there's so many reasons I can't even get into it. 5,000-year history of precious metals being currency. A lot of times now people are saying, where do I store value? What actually has value? And especially with all this currency creation, which I think is still in full force, which we know will continue in the future. And so getting into an asset like precious metals is a great place to be. So we're going to get into it. He's got some very compelling stuff. If you are listening to this, then I suggest you also watch it on YouTube and if you're watching on YouTube, you'll see the charts that David is going to share and just some really compelling information as far as the demand that's going to be there, the things that are needed for the future. But I want to hear your thoughts on, precious metals. What do you think about silver? What do you think about gold? Are you an investor, or what are some things that you like or you don't like about it? Because I've been doing it for years. Of course, you've been following precious metals, especially gold, has done very well the last few years. And again, it's looking at wealth as not being dollars or not being other things, but something that actually stores wealth, right? Dollars are simply paper that we all believe is worth something, but gold and silver, there's no negotiate. I mean, it's an internationally traded thing. We look at what central banks are doing. So let's jump into this interview with David Morgan. All right, welcome to the Mailbox Money Show. I've got my good friend David Morgan with me. David, how are you today?
Bronson, I'm doing well. Thank you.
Awesome. It's always good to see you. I was actually on your show recently, which was a lot of fun. You're a great interviewer. So I've had you on a lot of my stuff and done panels and things like that. So I think it's the first time you're being on the Mailbox Money Show. So excited to have you on here. So why don't you, I've shared a little bit about your background here. Why don't you give people just an idea of what you're working on? I know you have a presentation that you're going to share, which we're really excited about seeing. And if people are listening, I encourage you to check it out on YouTube because you'll be able to see the presentation that he's sharing. He's put quite a bit of time into this and just want to give you the opportunity to be able to share. But excited to have you today, David.
Well, Bronson, again, thank you. Yeah, my typical bread and butter is a financial newsletter, pretty much devoted to the macro picture and then a subset where to go for safety or wealth protection. That's basically the precious metals. But we're beyond the precious metals. We look at all the resource sector. And so we look at kind of the mineral de jour. We've looked at lithium, copper, molybdenum, some of the exotics, cobalt, the battery metals, the rare earth elements, and all that stuff. We've covered them all over the years. And of course, I'm always gathering information really on two sides. One is, what element of the day is important to, technology, and the other side is what's going on in the global financial system. So the report covers kind of the editorial covers pretty much the global financial picture. And then the specific stocks that we look and do due diligence on or vet for our readers comes to a model portfolio, which is where I'm putting my money so people can look over my shoulder. And we have an alert service by text and email. You can do them both or just one. And it's been pretty successful for the last, 25 years. There doesn't seem to be as much interest actually right now in the precious metals as the price might indicate, because we've been hitting nominal highs in gold, but silver is still the probably best value, overlooked and underloved investment class that you can see. And you asked after one of our interviews, why don't you do an update for us, for your listeners and viewers on the metals market, or excuse me, especially on silver. So I put together a presentation. So if I could just go
Yeah,
ahead,
you can show your screen there. I just want to say while you're getting
yeah,
that pulled up
let
there.
me get the
Um,
right screen.
yeah, so one of the reasons I love precious metals, a lot of people are like, well, Bronson, you do real estate. That's your background is real estate. Why are you into precious metals or these other things? But as an investor, it's important to look at the global macroeconomic picture. And I didn't realize this a number of years ago, but at one point I realized that wow, metals, particularly gold and silver, have had a 5,000-year history of being money. And so, David's going to get into this report, and I just, have a lot of respect for what he does and want you to, if you're not familiar with David and his work and what he's done, just encourage you just to have an open mind and be open, because really at the beginning of the day, it's about wealth preservation. And then it's about, growing capital or growing your wealth. But if you can't preserve it, what's the point of growing wealth, right? If you just make it, then you can't preserve it. So this is, I'm excited to share what you have to share, David.
Very good. So This is a disclaimer, and I'm going to try to be very clear when I'm doing these slide presentations, so those that just do audio can follow along without having to see the slides. But this is just forward-looking statements. I'm not a financial planner. Do your own due diligence. This is for educational purposes. So the first thing I'm showing is the junior mining cycle. Now, this is where, unfortunately, with all the experience I have, where most people get involved in the mining side of precious metals, and they find what I call story stock, something in the junior mining sector. Usually are actually literally penny stocks, where it'd be like a cryptocurrency where you're buying something for 12 cents or 25 cents or whatever. But very, very speculative, very much needed, though. The junior miners are really what go out and explore and find deposits. The problem with it is the odds. The odds are out of every 4,000. So this is generally speaking, the odds vary, but for every 4,000 junior mining companies, one becomes a mine. So it's better than a lottery, but not a lot.
Wow.
So if you just bought 4,000, if you bought every junior mining company and put an equal amount in them all, like $100, chances are the one or two that hit that might make it 10 times your money, 20 times your money, sometimes 100 times your money would break even if you had all the rest were losses, So you got to be very careful in this sector, but it is an exciting sector. And so I'm going to talk about it. So it is a speculative investment. I want to repeat that. And you see on this curve, and I know there's those just listening, but starts off, you put your money in, very high risk. You go into exploration, and while exploring, you hit a good amount of whatever you're looking for: gold, silver, nickel, cobalt, copper, and you get some really good drill results. And the market takes off in anticipation that you've made a discovery. So the stock price rockets almost straight up. That's what this curve looks like. The hockey stick gets to the top, and that's the time you want to sell. You want to sell near the top. Now, there's a red dotted line you can barely see that shows it coming right straight back down if the project fails. But we're going to look at it and just disregard that project fails. It brings it back down basically to nothing. Started 12 cents, went to $12, came right back to 12 cents because the project didn't make it. But let's just say it goes to $12. Well, even though the market got so excited, it overvalued that company. And that's why people like me that have been in the business for a very long time can be, worth our price in gold. I'm trying to be humorous here, but because we could get you out there at the top and not, even though you made a big discovery, you're actually going to lose money because usually, almost always, not every case, goes overvalued. So you sell when it's overvalued. Then the price settles out much higher than when you started as a speculation because it's a discovery and it's one of those 1 out of 4,000. It's going to be a mine. So the price settles down, and then you have all this time to go through a feasibility study to get a preliminary economic assessment, and then you have to raise more money to put in the construction and the mining camp and the roads and the water and all these things. It's a very difficult business.
Mm-hmm.
And so all that goes. So the price usually stabilizes and goes sideways for it can be years. And once you go into production, then you start to go basically trade like any stock. It's based on earnings. So if you have really strong earnings, the stock price will go up. So that's it. But I think it's important to point this out because a lot of people buy a junior mining company and they're drilling for a discovery. And people that maybe have seen mining in a film somewhere, they see them, miners on the wall of the ore body with what you would call drills. It's not done this way too much, and they see that drill going in and knocking off ore off of the ore body. They think anything to do with drilling has to do with actually taking ore out of the project. It's not true. All the drilling, almost any time it's referred to as drilling, that's exploration. So let me move on.
That's interesting. Real quick, just a comment I didn't realize it's that high risk in the sense of 4,000 companies and maybe one of those will actually be a strong performer and the rest will fail, right? Or will kind of peter along.
Well, yeah, thanks for bringing it up because there's a little more to it than that. I mean, first of all, that's a fact, so let's stay with that. But the frenzy, especially at the beginning of the cycle, which was in the early 2000s, and I participated in, the anticipation that you've got the winner, and all these stories are great stories. I mean, these are things that, that's like putting an adult to bed. There's this discovery in this unique island, and it's because they just go on and on. They're very,
Right.
very entertaining.
It's
But
very
what
convincing.
happens
It's
is
very
the
convincing too.
cycle.
Like they're so convincing. They just make you sound
Oh,
like things
absolutely.
amazing.
I mean,
Yeah, it's really good storytelling.
I got one of the promoters a little angry with me at one of the gold shows, but I was just talking the truth. And I was talking in my workshop, so it wasn't like on the main stage because I knew I didn't want to be to use some discretion. But I said, look, the truth. They're asking, what about this company? What about that company? First of all, I can't know them all. Secondly, you got to think logically. Every mining company that has a trade booth out there on the floor with some babe by it or some geologist or some CEO or whatever, there's an average. There's an average for those 2,000 miners out there. Some are below average, some are above average, but there's an average. But if you go talk to any one of them, they're going to tell you they got the best geologist in the best location with the best infrastructure, with the best financing and the best. Well, they can't all be the best. The truth is they're average. So what you've got to do is figure out, first of all, what is like the top 10% of those 2,000. So now you've narrowed it down to 200. Well, that's a lot to invest in. Now, how do you, so, I kind of gave my pitch, but that's the truth. But going back to your question, no, these things could go wild just because of the idea of the sector. For example, go to the cryptocurrency market as a good analogy.
Sure.
Once that started going, anybody that put up a crypto with a name and a story, the thing went up. Same thing with the mining sector. In fact, there's a lot of parallels between the mining sector and the crypto sector. And I've made a set of videos, or should say podcasts, 30 of them actually. It's on my website for free on the blog. If you hit the blog tab and type crypto conspiracy into the search engine, you'll pull all 30 in sequence. And basically, one of the people that came to me, John Perez, talked about the PSYOP, that there was a PSYOP going in the crypto world to take money out of the precious metals industry and into the crypto sector. You can buy into that or not. But if the crypto sector did not exist, a lot of speculative money that usually went into the junior mining's company would be there. So I'm just going to be neutral on what I just said, but it is an interesting thought because, to repeat and make it very clear, I mean, if the metals markets gets very hot again, I believe it will, this junior mining sector will come back really, really strongly. And there'll be a lot of people that are late to the party. And this is where the psychology of markets is so important. You really want to know how to beat the market, you should study psychology more than that.
Yeah.
But what happens is people that are late to the party and goes to 3,500 and their uncle just bought gold for the first time and telling them how much it weighs and how shiny it is. And he's so ecstatic holding the gold coin for the first time. Well, his son-in-law is going to say, well, you know what, I'm late. Gold's way too high, but let me find out about these gold stocks. So he starts searching for the cheapest price gold mining companies, really exploration companies that he can find. He sees these 12-cent, 20-cent, 35-cent stocks that have gold in there. So they'll buy them, and a lot of other people buy them. And so you could buy a stock if you get in early in the panic buying mode and do quite well. I'll give you, I know we have some time. I don't want to run myself out of time. I experienced that myself. There's a guy when I was working in the aircraft industry, but in the finance on the side, loving it, trading futures and all the stuff I've done in my life. Gold's going up and up and up. So Phil Lutz was older than me, much older. I was very young in those days. And he finally kind of caught the gold bug and he goes, okay, I'm going to buy some gold. So what did he do? Went to the American Stock Exchange from the LA Times. In those days, the whole thing was like 1/8 of the page. Went through, could read them all in probably 20 minutes. So he bought Golden Knight, thinking it was a mining company. He bought it for $1. It went to $2 and he sold. Found out later it was a lingerie company. But the idea was it had gold in its name and gold, everyone's panic buying. So that's a perfect example from my real experience in my real life of what happens. So it isn't always the 1 out of 4,000. That's when the market's hard, it's tough. All these guys can't raise money anymore. Those 4,000 companies are down to 400 because 3,600 of them are gone. They just don't exist. That's when kind of this curve is more appropriate. But when the market's hot, it's hot, and everything, the big, ocean lifts all boats.
Well, David, I wanted to ask you this question too, because I've realized I went to the Vancouver Resource Investing Conference, been to the New Orleans Investment Conference a couple of times, and these are junior mining type conferences, and I found it's challenging for anyone. I mean, at least for me, I mean, I feel like I understand some things about but some of the terms that are used and things, and it's a lot of data and there's a lot of story, and it's hard to evaluate some of these, what's a great company. So how do you, like, when you say, oh, we're going to go with the top 10%, what are some of those like metrics a layperson can use to kind of like evaluate that?
Yeah, it's an educated guess. And just to tag on to that, and I'll answer your question, but there's another newsletter writer that has a certain geologist, and they tout that the fact they've got this geologist on their staff for their newsletter, and guy is less than average, and I know that. I'm not going to, put anyone down. There's really no way. The way that I did it in the beginning, well, I'm going to run myself out of time. The way I do it is who's done it already.
Right.
That is mainly the people. I look for the people and the financing. If there's a people that have done it before and they have enough in the bank when they start their drill program, that's your best bet. But it's still a bet. It's an educated bet, but it's a bet. That's it. Like the Kentucky Derby. You might bet the jockey, you might bet the horse, but you better bet the ones that are most likely. The odd, the long shot does come in. It rarely happens. The other thing is, what I teach is what many teach. If you're in the speculative sector and the price doubles for whatever reason, a lot of it has to do with sentiment, and the market's going up, and gold's moving. So some of these juniors that are in my list that are looking pretty poor right now, they may get a pretty good lift, because all of a sudden there's excitement in the gold sector and the people still believe the story, and they tell their friend, how much is that? That's 25 cents. Oh, 25 cents. I can afford it. So they look at it like buying something at the dollar store. If the stock is cheap, they can afford it. Well, no, I mean, if you're going to put, 10 grand into, Berkshire Hathaway, or 10 grand into a mining stock, you're much better putting it into Berkshire Hathaway. It's not a good deal just because it's cheap. Cheap stocks are cheap for a reason. So anyway, that's how it works. But that's how I do it. But you'll get a lift, but you got to know the time of the cycle. There will be a time when these stocks really go. There'll be a lot of newcomers with a lot of fresh stories, or recycled stories, I should say. And people will go, oh my goodness, what an opportunity. I missed gold between 2,500 and 3,500. But look at this great story about this stock in Utah on, that was discovered when, the pioneers went across the Great Lake. I mean, these stories just get incredible.
Yeah, that's funny.
So I'll keep moving on, because here's one of my favorite charts here. This is hard to do with verbal only, but it shows you after Warren Buffett bought silver in 1999. This is the inflation adjusted price of silver. That's very important. Inflation adjusted. So $1 back in 1300 is the same as $1 in 1999. That's very important. So we're comparing apples to apples. So if you look at this chart, you can see that back in the 1300s, silver was 400 an ounce. If you look at the all-time high, silver's all-time high was 800 an ounce.
Wow.
You drop down from the year about 1550 to 1750, those 200 years, silver traded around 200 an ounce. So anyone that said constant dollars, these are real dollars in 1999 terms. So if you use in 2024 terms, the CPI has doubled from them. So when I say 200 on this chart, to make it clear we're looking at the same thing, it'd actually be 400 right now.
Yeah.
So when people say silver is, is it ever going to make it to 100? I think it will, but it shows you the historic. But all that, until we get over here to about the last fourth of the chart, silver's, and this gold line down here is the gold to silver ratio. You can see it's pretty constant. It stayed under 20 for centuries. from 1300 about 17 to the 18th century. And the reason is that both gold and silver had one function, and one function only. They're both money. So when silver is only money and gold is only money, the gold silver ratio trades very similar to what the natural ratio is or how it comes out of the ground, which is fascinating. But once it was demonetized in 1873, where my cursor is, I know people listening don't see the cursor, but that's when silver really went down relative to gold. And this is when we saw silver really go crazy. It popped up during the Hunt brothers era and popped way down. And you can see on this chart, if you're on the radio or podcast, on an inflation adjusted basis, it's an all-time low at $4.73 an ounce. And that's when Forbes did this. It shows Warren Buffett buys. So that's a pretty good buy. He bought it at an all-time low on an inflation adjusted basis. Now, just to be super clear again, silver was 22 cents during the Great Depression, but 22 cents was greater value than 473 in 1999.
And it seems like I'm just looking at this, the chart here, like you said, it could be $800 an ounce back then, but because of this steady stream down, it's because, I guess gold is still seen as a monetary metal. Is that part of it? And silver is not. And so it was removed.
That's the gist of it. The banks still look at gold as money, and they quit looking at silver as money in basically 1873.
Right.
So I've done about 3 lectures, said, what if silver were treated like gold? And the gist of that is what you just said. If the banks looked at silver as a monetary asset, what the hell would the price be? And the price would be astronomical, because even at a 16-to-1 ratio, which was the monetary or classic ratio, they'd have to buy a lot of silver to get the vault to match their gold holdings. In fact, the reality of it is they couldn't do it. There's not enough above ground silver to make it happen. So,
well, and that's a really good point too, because silver has a lot of uses beyond. I mean, people use it for the precious side, but there's so much industrial use of silver, particularly with all the solar technologies, green technologies, and a lot of this. I don't know if we're going to get into this in this presentation, but just
we're going to get there as long as you give me enough time.
Okay, sorry, keep going.
It's the most exciting part. So this goes back to, again, the market psychology as much as anything. You see the stealth phase. That's when no one cared about silver. Then we got an awareness phase. We got people in the silver market. Then you saw it go all the way up to $50 an ounce in April 2011. And then it sold off, and it's been in this phase. It's gone through the despair phase, starting to cycle over again. So this cycle repeats. And we're now in pretty much, I'd call it the awareness phase. The stocks are selling off, real estate not doing as well. Definitely problems in the commercial real estate. I know you'll let me say that. I know you're an objective man, and facts are facts. I think there's more to come on the commercial side, which may spill over into some of the residential spots. I mean, there's always opportunities in any market. I mean, there's an opportunity right now in the real estate market, but you got to know what you're doing. It might be a foreclosure. It might be somebody, whatever, but I don't want to go off the track here. So what I'm trying to point out with this chart is that we're in a phase now where we're starting to get some media attention. You're going to see it more and more, where gold's mainstream financial channels will talk about it, and they'll start talking about gold making a new high, and they'll get some guests on and say, why are you in position in gold? Because you need gold, because all the studies that have ever been done on portfolios realize you get a better overall return with gold. If you have gold in your portfolio, it outperforms just a real estate portfolio, or just a stock portfolio, or just a bond, or a bond/stock portfolio, which most are taught. But the financial planners don't make any fees on precious metals. So they never add them to their portfolio. But the best portfolios have a 15% weighting in gold or silver. And in times like these, Jeff Christian proved from CPM Group 25%, which sounds like even too high for me. But again, a fact is a fact. So from 1968 till right now, you would have another couple of points that have the charts is, what is the reality? And the reality is, if you put the stock market in terms of gold, it peaked in the year 2000. We're 24 years beyond the year 2000. But in terms of gold, we peaked way back then. If you do that in terms of Bitcoin, the same story. That last peak that we had a few years back in terms of gold was so far the ultimate peak. So people, they poo-poo gold. You understand it was a gold bug. Most people that understand gold are probably the smartest people in the financial sector, bar none. Excuse the arrogance, I've earned it. But I've had to defend it all these times because people don't understand it. Gold is a constant. It's supposed to be a constant. And because it is a constant, you can measure everything against it. So if you measure Bitcoin against it, gold's winning. If you measure real estate against it, in most cases, gold's winning. If you measure stocks against it, it's winning. And bond market from 1980, I believe, I mistake this, gold's winning. So it's not like gold is anything magic, but it is the paramount financial monetary hitching post of the universe. It's that. And anyone that overlooks that doesn't really know markets or understand money. And sorry again for the arrogance, but I get a little on my high horse because
it's so
I don't
true.
want to sound so defensive, but the truth is what I just told you.
Yeah. Well, in central banks too, that's what they're buying. They're buying gold. They're buying tons of precious metals now. And I was a registered investment advisor for several years. And I realized I couldn't do it anymore because it was like the Wizard of Oz seeing behind the curtain that this was just, stocks and bonds are not going to get you where you need to go. And it's the reason why when there's no incentive, they're not going to sell. Why would they put people in the gold when they don't get a fee on it? So you're absolutely right.
Just doing this is gold, silver. This is from the last bull market. And from some 50 historical bubbles, because when gold hit that $1,000 level, it was in a bubble. Well, this shows you what that market really looked like in terms of some of these other ones. So if you see gold and silver in 1980, gold was up 3,000%, gold was up 2,200%. And this last run up, gold was up about 500%, silver's up 900%. This is an old chart. But compared to Freddie Mac was up 3,000%, Citigroup up 4,000%, AIG up 4,000%. This is an old chart. Tulip bulb mania, 6,000%. Now we're getting into kind of the Bitcoin territory. Fannie Mae up 12,000%. So anyway, that's just, and the reason I show this chart is because I do think, and I'll say think and believe, that when the panic hits, maybe it's starting now with this thing with the yen carry trade, I don't know yet. There will be people that will wake up as you did, and admire you for being so truthful. I mean, there's so much nonsense in the financial markets and generally speaking, but back to reality. The idea is that metals preserve your wealth. They're not going to make you wealthy. In some cases they can, depends if your timing is good. But here's a chart I really want to go through. And this is one that obviously the listeners can't see it. But this is a demand case for silver. So we took silver out of the monetary picture roughly 1870s. And what this chart shows is two curves going horizontally. One is a red dotted curve and one is a black dotted curve. I'm going to focus on the red dotted curve, which is the silver supply on an annual basis with all mining and recycling. So everything that gets recycled plus everything that's pulled out of the ground is roughly 1 billion ounces a year. And it stays there. And this projects into 2050. And I believe that's pretty accurate. The last 10 years, we've had very little increase in mining supply. Recycling ebbs and flows, but generally you're getting 1 billion ounces a year. And I don't see enough new mines coming on quickly to alter this in any way. I don't see any magical refining coming on board quickly that will alter this in any way. So I'm going to stick with the idea that we're actually slightly going down. So the amount of metal mined and recycled is going to be slightly going down to the right, but we'll just call it straight across at 1 billion ounces. Well, what happened in this chart is not really accurate. And I have a newer one, but I'm not going to mess up the presentation. Go find it. But this bar here in 2024 is actually way up here because we have a deficit of 200 million ounces this year. Excuse me, we had one in 2023 of 200 million ounces. and likely to have the same or more this year in 2024 and 2025 and 2026 and 2027. And it continues to grow up and up and up and up and up and up, which means we are going to eat the available silver supply that's above ground right now, theoretically in 4 to 5 years. That is the best supply demand scenario of anything I can talk about. Now, this might be true for, baseball cards. It might be true for some other, but for a main commodity that's essential to technology, that everything in our life that touches electrically or electronically requires silver, and there is no substitute for it. Oh, wait a minute. Yeah, you could substitute gold for it sometimes, not always. And it's, what is it, 80 times more expensive? Now, you could usually substitute platinum, palladium, but they also are several fold more expensive. But even graphene, which is proven to be pretty good on electrical conductivity, isn't cheap enough to replace it at this point. So solar demand, and the thing that I don't agree with Matt on this chart is the silver bars going up, because what he shows is a constant demand for silver going from 2024 onward. I disagree. I think as the real estate market falls off, or is it giving returns, or maybe there's more taxation, or, get the rich, they own real estate, we better tax them more, or rent control so you can't make good and inflation keeps going. So now you're the landlord being good to your people. You've been nice to them, kept their rents modest, and all of a sudden you're taxed higher and you can't up their rent and get everything, all your maintenance bills double because inflation is so bad. And I'm not anti-real estate. I have some. I try to stay balanced.
Yeah.
And so my idea is this: as these other markets fall off, bonds, stocks, real estate, people are going to seek, well, what is working? And the answer is the metals are. So my projection is that that deficit will be eaten up even more and more, because more and more people are focusing on metal, not on, and even businesses. I mean, look at all the businesses that were maybe not thriving, but doing well, and maybe plans to build them out or, grow them or whatever. And then the illness comes and they're gone. These people's dreams are gone. And I'm a compassionate, empathetic guy. I mean, anyone that's been in business and, failed a few times or whatever, and even if you succeeded from the first business you started, there's demand on you that's above and beyond the average person, in my opinion. And all the people I've met, and I've met hundreds of entrepreneurs because many of them subscribe to my service, it takes something special. You got to be able to dig deep to put in those extra hours. Yeah, you're working for yourself, but you're still working. I call it fun because I'm passionate about it. But believe me, there were a lot of times, especially in the beginning, where it was 7 days a week and 10 hours a day. And anyway, back to my point, I am very much assured that I'm right, not necessarily David Morgan, but understanding of markets and how a fiat system eventually collapses. That's not me. That's me giving a message of people much brighter than me, have written a lot of these books behind me, and interviews like yours that portend, unfortunately, that you can't live a life forever. So you can't print your way out of this. You can for a while. That's what happened in 2008. But I think we've caught up to the end, and the end is nigh, in my view. I'm not saying this Japanese carry trade is going to start it, but it could. It's already started. Whether or not they'll rescue it or not, I don't know. It remains to be determined. So that's the most powerful chart I can give you. Hope I did a fair.
It's a great chart. I want to just make a comment about this. So, there's so much, there's a lot of things. I think as an investor, it is important to look at, we talk a lot about this, my goal personally is to own everything and operate nothing. I don't want to be the one who's managing real estate. Like I love real estate, but I love what it does for me. I love what owning precious metals as an insurance against inflation, as something that actually stores value. And I mean, this chart just really, to me, says you see the automotive, the solar, and the electrical power distribution. It's just those things are going. There's so much more need for those in the future because they're trying to go green. And so it just puts a pressure. You only have so much stuff. And like you said, with manipulation, I think there's been proven. I mean, Chase bank and manipulating gold or silver and find billions of dollars. And there is manipulation of the metals prices for the reason that they want to keep prices low. And so if you actually physically own metals, I think this is why it's important to own it now, because when this stuff spikes up and if people, start saying, hey, where do I store wealth, right? If inflation is much higher than they're actually saying, and I can't cash flow on real estate and I can't put money here or there, what's safe? If you get a crash somewhere, what's safe? Well, that's why precious metals are safe.
Yeah. And they are down today, just to be clear, but
Yeah,
one day
everything's
doesn't
down.
make a market. And I don't laugh, but I know these markets, especially the metals, quite well. And gold or silver's up 5% today. And I thought, that's a pretty big down day. But the stock market's down 2.5%. That's a horrible amount, so it's
Yeah.
kind of relative. But on that topic, you go to the yen, and you're looking at what's going on in Japan, and they're down 12%. I mean, that's the equivalent of like 1929, folks. This
Yeah.
is no joke. And again, is this going to be the beginning of the financial markets, going to a reality? In other words, repricing to reality rather than this fiction that we keep hearing from the mainstream financial press that everything's fine and got all under control, which they don't. I don't know, but 12%, that's something to be a wake up call. And for people, and I will predict, and I'm 99.99% sure I'm correct, and that is that gold and silver will be the first to bottom and start to way back up. And the reason is because it's the only safe haven out there. I mean, there isn't a currency you can hide in. If you got a lot of equity, you own all your real estate out 100%, and cash flow is good, you're fine. Nothing really changed for you. But if you're in the stock market or you're exposed to the stock market through your employee savings plan or your whatever, even insurance companies, even annuities. I mean, there's things out there that have a counterparty risk. Gold and silver have zero counterparty risk, none. That's
Yeah.
called safety.
Yeah, that's it. That's really it. And there's so many positives to it that, I just didn't realize I think I actually first saw you on this episode with Mike Maloney on the hidden secrets of money. And it was just talking about, why there's a 5,000 year history. And this is stuff we're not taught. And I think from the mainstream perspective, or even a lot of people listening or watching, we're educated by Wall Street because they have billions of dollars to spend because of the retirement ERISA law that was passed in the 70s and 80s. And this is how we're taught. And we're taught by groups that are incentivized to sell us stuff. And I've just realized in finance, every single person in finance generally can benefit off of someone investing, and even us as well. Like we have deals we do, so we want people to do our deals. But metals is not, unless it's a minor, there's really no interest there except, hey, this is something that helps hedge inflation and preserve wealth. So, love it.
So this is from Incrementum. In fact, one of my staff writes the silver section for the gold book, which comes out every year. Anyway, back on point here. This shows that the total gold investment holdings by professionals is 1%. If you go back to 1970, it was about 5%. So as this market readjusts, as I keep harping on, that total could double. It could go back to 5%. So the gold market is an extremely small market relative to the bond market, the equity market, real estate. Gold's a small market. Silver is an extremely small market relative to the gold market.
Right.
So, for example, there's about 5 trillion out there. If you take 1% of 5 trillion, you have 50 billion. 50 billion is the silver market for 2 years. Silver at $25 an ounce is a 21 billion times 25 is 25 billion. So the entire silver market, everything that's mined on the planet, plus everything that's recycled on the planet, is roughly 25 billion. And that's 0.5% of the available capital to move. You don't think people get scared and want security and look at silver as a safe haven, just like they look at gold as a safe haven, that at least 1% of that money doesn't move into the silver market? Then I've got some oceanfront property for you.
Oceanfront in Arizona. Yeah, that's good, man. Well, I love it, man. I love what you're sharing. I think, again, this is the conversation we talk about a lot of the Mailbox Money Show is just this, getting what do different assets look like? And, it's not just real estate or whatever the asset is. It's what does it do for you? So let's talk about this. Your chart, what you got on the screen here.
Well, a couple things. I picked up this from one of the Wall Street guys. It's, very knowledgeable, Jeff Christian from CPM Group. And he said to me years ago, I think back in like 2000, well, 90% of the move comes in the last 10% of the time, which is very frustrating to a long-term precious metals investor because you want it to do like real estate, some ups and downs, but overall appreciation year over year or on the long term. And it does do that because the depreciation of the currency takes place year after year. But gold and silver prices don't reflect that in a linear fashion. So the markets go up and down. Well, when you get into a phase where people don't trust the currency, this is what happens. So I'd add on to what Jeff said that 90% of the move comes the last 10% of the time. So in January of 1979, the price of silver had hit an all-time high. It hit an all-time high from 1964 when it was money to 1965 to 79 as it was been demonetized for all those years. It's 14 years, 15 years. Hit an all-time high of $6. If you'd held it outside, stacked it, you made a profit. We've been adjusted for inflation, you're probably up or at least even. But if you're a ranked speculator, so I'm going to buy silver at the all-time high, which people want to sell high, don't want to buy high. But you were just dumb enough to buy it at $6 and you waited a year, you would have got over an 800% gain because it went from $6 in January 79 to $50 in January 1980. And so just to check the math, the total move was about $48. 42 of those dollars came in the last 13 months of a 180-month cycle. So you do the math here. So 87% of the move came in the last 7% of the time is the exact number. The reason I give this out is because once these markets take off, they're so small, as I just told you, that it takes very little money to move the market. It's like wanting to have a monopoly in a small town and there's one multi real estate building that has, a unit. It only has 8 units in it. And the miners are moving into that town. Well, you could believe that thing would be bid up because they know that whole thing's going to be rented for the next 3 years, no matter what. And they don't have enough time to put up, another building. Anyway, I'm trying to give an analogy to real estate. The point being that once the panic starts, you want to get in early in the panic or before the panic. Buying some today on a 5% down move might not be a bad one. It's just the bottom. I don't know. I've already predicted the bottom for my paid clients before the Japanese yen trade started to unravel. And so it's already accounted for in the charts, in my opinion. And my opinion remains that I don't think you're going to see silver much lower than 26. And we're already at 27. So am I right or wrong? I don't know. But that's what my work shows is the most likely. So I think, again, you don't want to, let these markets with these huge gyrations panic you. The best thing to do is to do a dollar cost average over time, get in relatively low. But if you're all into stocks, all into whatever, and you don't have precious metals, then you're with 99% of the crowd. It's at least on the professional investment side from that slide I just showed. 99% of the wealth managers, the highest paid, best known, financial planners, wealth managers, family offices, pension funds, insurance companies. Think of all the money that's sitting out there that might get scared, that could move into these markets. So another way to do it is this. Say, I don't believe a doggone word Mr. Morgan said, and I'm not even sure why Bronson put him on. But here's what you do. You wait for silver to hit a new high above 33, and you wait for gold to get a new high above 2,500, and you buy high. Because remember what I just showed you on this chart. You buy high because it's going a lot higher. So if gold goes from 2,500 to 15,000, you'll be darn happy you bought it at 2,500. When you buy it at a new high, what you're doing is you're giving yourself a psychological advantage, because in most cases, if you use the Morgan rule and you buy it at a new high, it's going to hit another new high. When a piece of real estate goes from $100,000 to $500,000, how many new highs does it make? A lot. It keeps going up and up and up. Or think about a stock. Buy a stock at $5, it goes to 50. How many new highs does it make? A lot.
Yeah.
And when it makes a new high, everyone that owns that stock says, I'm not selling. Why not? Well, I don't know how high is high.
Yeah.
It's going to go higher. So that
higher.
dries up the pool of available stock. So the
so
floor gets really tight. So now there's just a few shares out there for sale. So any new buying puts the price up higher to make another new high. So now what happens? Well, all those, some people are holding, say, that's enough for me. I'm not too greedy. I'm getting out right now. I'm going to sell half my position or whatever. And that's fine. It's part of the stock market's ebbs and flows. But still, as it makes a new high, there's everyone that's new saying, geez, this stock just keeps going up. And that's what will happen in the metals markets. We'll get the financial commentators on, the main financial channels. They'll get the my, gold just keeps going higher. I never thought we'd see $50 silver again. My, silver just hit triple digits. So you heard it here first, folks.
You did. Yes, David. Hey, I just want to say I really appreciate you for being here today. I know we could talk for a very long time. I really encourage everybody to check out your resources, and appreciate you sharing this with our audience. We'll have to have you back again soon. So super grateful. But how can people reach out to you if they want to connect?
Yeah, it's great. Just go to the main website called themorganreport.com. Get on our free list. You get a lot of information for free. And then there is a paid service. You can go to the subscriber bar and find out more about that. But certainly get on the free list. I have a YouTube presence and a Twitter feed at SilverGuru22. Pretty active on Twitter. Our YouTube channel is easy to find. Just type in the Morgan Report and you can find it. And one of the best books you can buy is called Second Chance, written by myself and David Smith. And it's really an investment book more than a precious metals. But it talks about how to make and keep big money from the coming gold and silver shockwave. Some people do a round trip. They'll buy it, $50 silver, watch it go to 100, watch it come back down to 50 and hold it the whole time. Never do that. And this book talks about how to plan an exit strategy, not to get the last penny out of the market, but to make money and preserve your wealth and do what you said you do when you started an investment anyway. I'm in this investment because I want to increase my security, my savings, and my capital structure. I want to have capital appreciation. And this book is, I've been told by a couple of people, it's the best investment book they ever read. I'm certainly not going to say that, but there are ideas in here you won't find probably anywhere else.
Yeah, man, appreciate you being here. And I look forward to doing more with you, hopefully in the future. I'll have to check out your new book there.
Okay, good. Thanks.
All right. Thanks so much, man.
Bye-bye.
Okay. All right. So awesome interview. Sorry up at the end there, got a little cut off. But anyway, really encourage you to check out David's stuff. Just an amazing guy, really interested in just helping people. I think when people get, he's been doing this for 30 plus years. And when you get to kind of toward later on in your career, you're just like, hey, I just want to help people. I just really want to see people. I know friends like Ken McElroy and other people that they do it because they really want to help people. And so I sense that with David as well. Amazing guy. Check out his book, check out his resource called The Morgan Report. And I'd love to hear any feedback or thoughts from you. Again, if you're not on our investment club, you're not hearing about these awesome deals we're doing in the business world and real estate. We're continuing to find great deals and give opportunities for investors like you to join us so that you can get that mailbox money. You can fire yourself, just like my book says behind me, and you can learn to replace your working income with passive income. And so if you haven't connected with us, check the link below or go to bronsonequity.com, hit the join button. We'll start a relationship with you, and we'll look forward to connecting with you on a call. But thanks for taking the time to educate yourself. Look forward to seeing you on the next episode of the Mailbox Money Show. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.